Hello friends, this is Raj Sastri from Raj Option Trading. Today is November 26, 2021. Let's talk about top fintech stocks. We'll look at the landscape of fintech stocks and then focus on PaySafe, StoneCo, SOFI, and Green Dot. Let's also try to stack rank them and see which one fares better. So with that, let's jump in and get started. As we'll talk through the top fintech stocks and the landscape here, and then jump into a few charts and review a few charts, and then we'll go into the top fintech stocks and cover them from a small cap to mid cap to large cap to mega cap. And then we look at the top fintech stocks, the volume greater than 1 million shares, low RSI, positive gross margin. These are the stronger candidates that we got to look at and see what we can buy here. And then we'll compare PaySafe, StoneCo, SoFi, Green Dot, and also PAGS. And then finally we'll stack rank them and see what's faring better. So with that, let's jump in and get started. As we look through here from a top fintech exchange traded fund perspective, we got here mother of all fintech, which is XLF, broadly financial stocks here. Great 76 million shares traded today. And we got other ETFs here with the ARC Cathy Woods ETF here with 730,000 shares traded and so on and so forth. As you look through here, past couple days, fintech has been down big time as you see here. Today with the huge COVID variant in South Africa, almost all the stocks came down, including these fintech names as you can see here. So it's a good idea to see what great stocks we can buy here and be selective. As you look through here, let's look at the competitive landscape and take it from there. Let's first look at small cap names here. We got KPLT, Katapult Holdings, MITK, Tiger, and Jumia. As you scan through here, look, we got nice sales growth and gross margin in MITK. Little company, just $16 market cap here, almost $17. And Tiger, nice sales growth and gross margin. Again, very small price here and small cap, as you can see here, just 959 million shares. From a market cap perspective. And then we got here Jumia. Jumia also has got good quarter over quarter sales growth and gross margin. So bottom three are the better candidates here, and top on Katapult, as you can see here, nice short ratio. This can also create some short squeeze if you buy on a lower side of the house. As it pulls down, if we slowly accumulate, this could be a nice short squeeze candidate. But fundamental perspective, you got other three here with the better fundamentals here. And as you scan through here, best fundamental could be in either Tiger or even MITK here. So with that, as you see here, all the stocks have got high short ratio here, but highest short ratio is Tiger here, 28%. This stock can cause some short squeeze on any good news here. And MITK here, nice 1 year and 5 year sales growth. Performance, as you can see here, this is one of those steady eddy. But as you look through the volume here, from a volume perspective, KPLT and Tiger and Jumia have got great volume here. Those could be liquid stocks to get out and get in and get out quickly. So with that, let's jump in here and look at a few more. Now we look at mid cap names here. Keep watching the sales growth and gross margin. We got stronger candidates as we see here with ENV, BL, and so on and so forth. Many of these stocks highlighted in green here in a ticker column, or the stocks with a nice sales growth and gross margin satisfies rule of 40, where sales growth plus gross margin greater than 40%. So these are my favorite candidates here with ENV, BL, Shift 4, EFT, Encino, and so on and so forth. These are great names here with nice sales growth and gross margin. As usual, keep watching the RSI numbers. If the RSI is high like QFIN here, wait a little bit, no big deal, no need to rush here. But all the other names here have got low RSI for most of them, with the exception of IIVI here. So you could look at them and buy them slowly. Have that, these are some great candidates as you can look through here. As usual, keep watching the short ratio here. Some of these names have got high short ratio, could be good candidates. So next we look at the large cap fintech names here and look at some of those. As you look here, we got Affirm on the top here, Coinbase, which is a crypto trading platform here, and so on and so forth. Keep watching here the sales growth and gross margin. There are some great companies with the like Bill here with the nice rule of 40 satisfied. SE, one of my favorite company here, nice rule of 40 satisfied. And MSCI is a great company. And as you scan through it, keep watching the short ratio here. Some of these stocks have got high short ratio. They can create a nice short squeeze. One more thing to notice here. Look, couple companies here. Affirm is one, and we got here, one more here with the Path here, UiPath, and Upstart, Bill, and a couple more here. There is a improvement in one day. Even though stock market tanked, these stocks have got shown some resiliency here with the C and Bill.com, and we got SOFI and Affirm. So these are some good candidates here. They got some legs as we go forward. You could look at those candidates here, and we got two more here. As you can see here, some good growth performance in 5 days. Those are the good candidates also. So with that, I would focus on lower RSI candidates, stocks like Intuit and COF, Intuit and BXCS. Wait a little bit, let them come down here. But other names with the low RSI are the good ones. You can slowly jump in and buy, especially with the nice sales growth and gross margin. And with that, let's jump in here and look at the large cap stocks. Is a continuation. We got a few more great stocks here with Workday, ICE is again a great stock here, Square, JKHY, and so on and so forth. All great stocks with nice sales growth and gross margin. And keep watching the short ratio. As you look here, we don't have only one here. Square has a high short ratio here. Square is a great stock. I'm not sure who is shorting this, but it's not a good idea to short Square. It's a great company headed by Jack Dorsey here. So with that, keep watching some of these gross margin, and even many companies have got positive net margin. All of these companies have got positive net margin. Great candidates. You could buy these on the slowdown and slowly accumulate. So with that, let's jump in and look at mega cap stocks here. So from mega cap stock perspective, you got here JP Morgan, Mastercard, Visa, PayPal. Keep watching the volume here. Great volume here with the 13 million for JP Morgan, 10 million for Visa, and almost 11 million for PayPal here. Great volume, liquid stocks. You could slowly buy them into this weakness. Look, JP Morgan 5-day positive here. I think that's a good one. RSI is 51. Others are low RSI. PayPal is completely, sold off here with a very low RSI. Could buy this great company slowly and accumulate. So with that, now we'll jump into more liquid stocks here with the low RSI and positive gross margin. These are the stocks you can buy now, with the, these are stocks that are sold off, very liquid and positive gross margin. So with that, this is a short list. If you don't want to go to the big list, look at this short list here. Great stocks. Keep watching the volume here. All nice volume, liquid stocks here. And as usual, look at the nice sales growth and gross margin. Rule of 40 satisfied with the Bill.com, SE, Workday, so on and so forth. All these stocks with a green background in the ticker column are the great stocks with the rule of 40 satisfied. And many stocks have got positive net margin, meaning these companies make money, like Coinbase here, and we got Workday, ICE, and so on and so forth. Those are the stronger candidates. And you could also look at debt to equity here. Some of them got a little bit high debt to equity, like KPLT here, and few more. So you could look at them in a with a little more keen detail here. But I think stocks like Square is going to be okay here, even though there's a high debt to equity. That's going to be okay here. On the other hand, Western Union, high, very high debt to equity ratio here. I think this stock has done well in the past, but off late, this is not doing great, as you can see here. Probably you could skip this one and look at the stronger candidates. And as usual, look at the short ratio. Some of these stocks have got a high short ratio. That tells you these stocks can go up on a small good news. Look here, Bill.com. It's a great company. Folks are shorting this company here. Not sure why, but that's not a good idea. So with that, let's jump in here and look at a few charts and take it from there. From a chart perspective, we got PaySafe here, little company with just $3.89 here. Stock has been going down, 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 as you can see here. Lower lows, and finally came down here, gap down here. At this time, as you can see here on the balance volume, is trying to see where to go here with the no clear path, completely sold off here below all the moving averages, as you can see here. And as you see here, PaySafe, they got a nice gross margin on a yearly basis. That's a good 5% sales growth here. But performance perspective, as you can see, are red all along the way here. Good 7 million shares traded, very liquid that way. And as you scan through here, we got no activity in the insider purchase here. Institutions are selling a little bit with the negative 6%, as you can see here, and net margin negative. Debt to equity ratio perspective, it's not bad, it's okay. So this one is a contrarian play here. There is no sales growth, but if you want to own it for long term, this could be a good one, but no fundamental at this time. I think they are spending more time on their own product here. And then you got Stone Co here. Stone Co also, as you can see, are down, 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 down. And I think they had a gap down also. So, Stone Co, as I look through here, nice sales growth and gross margin here. This company does have, good fundamental. Top line growth is good here. As you scan through here, low RSI and low debt to equity ratio, and red all along the way here. Nice 7 million shares traded. So this is a little bit better candidate here. You could buy this one, sock it away. This should do well as Brazil recovers and their inflation situation improves. And then you got SOFI here. SOFI, this stock is he's showing some movement. It's not a one-way down stock like PaySafe or Stone Co. This is showing some nice movement up and down here. Right now it's down. I think good good level here to buy. I think SOFI could be a good one here. Even on the balance, volume is kind of trying to go higher here. SOFI, as you look through here, it does not have a sales growth yet. It's a little bit newer company, as you can see here. Too early to have a sales growth at this time. Institutions are buying SOFI, so there's a catalyst for you here. And RSI is 40, meaning it's beaten down at these levels. And there's a positive three-month performance here. Nice trading volume. It's a 13 million shares traded. So with that, SOFI is a better candidate here. This shows some up and down movement. Right now it's trying to bounce off of its 200-day moving average. Could be a good one to buy here. And then we got GDOT here, green dot. Green dot also showing some movement, but off late it's going down, as you can see here, trying to bounce here. So this is where you see a divergence here. Stock is going down a little bit, as you see here, but on the balance, volume is diverging. It's trying to go higher. That's why this is a good stock to buy at these levels here. Given there's a divergence between stock which is trying to go down, but on the balance volume trying to go higher. So that's a good one here. As you look at green dot here, this is a good company with nice sales growth and gross margin and net margin. Companies making money here, and they've done nice 59% in 5 years. So it's a little more stable stock here. You could buy this company here, $38 stock here, and stock it away. They should do well. And then we got here PAGS here. PAGS is a Brazilian-based company. Stock has been, this also showing some movement. Off late, stock is going down, as you can see here, after a huge drop after the quarterly earnings here. Now it's, trying to stabilize. As you scan through here, it's right now it's negative from a DMI perspective. Red line on the top, blue line on the bottom. That's a negative bias here. If the blue line is on top, then it's positive, but it's other way around right now. Check-in money flow is showing some positive sign here. Smart money is slowly flowing into the stock. That's a good sign here. Look, there is a high IV percentile, which tells you could sell some put options and make some money that way. If you're selling it, don't sell beyond say 50 days or so, and sell it below the current stock price. So with that, let's jump in. Even PAGS has got nice sales growth and gross margin, positive net margin, very, very, very low debt here. That's a good sign here. So with that, now let's try to compare PaySafe, StoneCo, PAGS, SOFI, and Green Dot, and see what's faring better. So as you look through here from a price perspective, PaySafe is cheaper of the place here, just $3.89. Then we got StoneCo, PAGS, SOFI, Green Dot, so on and so forth. As you look through market cap perspective, looks like SOFI is the biggest here, and then we got here PAGS, and then we got StoneCo, PaySafe, and last is Green Dot here. And as you look through the enterprise value here, looks like enterprise value is higher for PaySafe here than the current market cap. That tells you stock is really beaten down at these levels here. Even if you sell the company, you'll get almost double the money here than the current market cap. Then StoneCo also, its market cap is, as you can see, enterprise value is below current market cap. That tells you it's fairly valued here. And then you got your PAGS, same story here, almost same market cap and enterprise value are same here. It's at a a nice valuation level here. And then finally we got Green Dot here. Green Dot looks like enterprise value is much lower than the market cap. That's fairly valued here. And from a volume perspective, there is a nice volume in all these stocks here, with the exception of Green Dot, which is a little bit lower volume. But other stocks have got nice trading volume here, pretty liquid stocks. 3-month average also, I think, pretty good 3-month average trading volume in all these stocks except Green Dot, which is a little bit thinly traded, as you can see here. From an analyst recommendation perspective, we got a strong buy for PaySafe and strong buy for PAGS here, and buy rating for other stocks. And we got a lot of analysts covering. As you can see here, we got both buy side, both the earnings per share analysts or EPS analysts, as well as sales side analysts here. We got maximum or majority of the analysts for Green Dot here, and then we got PAGS and PaySafe, and finally we got StoneCo 8 and SOFI 8. So overall, I think analysts are covering these companies. Maximum for Green Dot, as you can see here. And from a target price perspective, you got nice target. Look here, PaySafe right now is $3.89. Target price is almost double, as you can see here. So nice, nice target price here. Even for StoneCo, look here, very big target price here. Current stock price is 16, target is 58. And we got same story for PAGS, nice target price here, and SOFI also good target price. All these have got high target price. That tells you stock is beaten down at these levels here, and analysts are projecting these stocks will go higher. And they're big from 52-week high here. Look here, we got PaySafe and StoneCo down big time here, down 80% or so from 52-week high. Then we got PAGS, and then SOFI. Finally, we got Green Dot here down 37%. So that gives you a good idea about the fundamentals here, and you can get a good idea what analysts are thinking here. Next, we look at revenue and the past revenue growth and margins. As you look through the revenue numbers here, looks like StoneCo and PAGS are doing better here, along with Green Dot. Great quarterly revenue growth, and even good year-over-year growth here in these three companies: StoneCo, PAGS, and Green Dot here. And from a gross margin perspective, clearly StoneCo is very good here with a 68% gross margin here. And from a net margin perspective, Green Dot is making money. It's a positive, positive net margin type company here. So with that, I think in here looks like green dot fares very well here, and then probably it's maybe PAGS and StoneCo, and then finally it's PaySafe here. And then we'll jump into a little more details here and try to compare from a fundamentals perspective and financial perspective. From a financial perspective, from an operating cash flow perspective, we got nice operating cash flow in PaySafe, StoneCo, as well as Green Dot. Whereas SOFI is struggling a little bit with the operating cash flow here, which is negative as you can see here. And from a cash perspective, I think StoneCo has got a lot of money here, as well as Green Dot, which is actually a bank. That's why it's a lot of money. And then you got debt perspective, as you can see here from a debt to equity ratio perspective, we got a little bit higher debt to equity ratio in PaySafe here. And then you got others which are doing okay. PAGS does not have any debt, which is great. And price to sales perspective, evaluation perspective, SOFI is highly high valuation here for SOFI, as you can see here. Others are manageable. From an earnings per share perspective, as you can see here, PAGS has got earnings and Green Dot has earnings. Others don't have earnings here. StoneCo and SoFi have got negative earnings, as you can see here. Clearly, I think PAGS and Green Dot are doing something right here with the positive earnings here. And then we got your future growth estimate. This is very important to look at future growth estimates. That will give you an idea what analysts are predicting for the future for these companies. As you see here, from a earnings per share growth this year, PaySafe negative, StoneCo positive, SoFi zero, and Green Dot negative, as you can see here. But more importantly, for the growth for the next quarter, as you can see here, all these companies have got nice growth projection for next year, highest being PaySafe with 375% growth estimate here from an earnings per share perspective. And then we got StoneCo, and then you got PAGS, and so on and so forth. And sales growth next year, this is where the top line comes into play, top line revenue. We got StoneCo with a nice top line revenue, 67%. Then we got SoFi here with nice 45%, and then PAGS, as you can see here. And finally, we got return on equity that tells you the profitability of the company. Looks like we got Green Dot, which is profitable. That's why you got 7.9 here, and they also have got positive ROA here. So Green Dot clearly fares better when it comes to profitability. But on a top line perspective, we got here StoneCo doing very well here, along with the PAGS and SoFi here. And next we'll look at a few more things here. We'll look at relative strength, as you can see here. These are technicals, as you can see here. From a technical perspective, as you scan through this year, StoneCo is clearly washed out, as you can see here, with the sold off completely, lowest relative strength index in last 14 days. Then comes PaySafe here, and then we got PAGS and GDOT and SoFi. So the weaker or a lower the number in the RSI, that tells you stock is sold off, and probably it might rebound as you go forward. And then you got money flow index. Many folks love money flow index because money flow index not only looks at the price, it also looks at the volume. Some folks call money flow index as a RSI with the volume into consideration. That's why many folks love money flow index instead of RSI. As you look through here from a money flow index perspective, PaySafe is completely sold off, and next is StoneCo, and then other two are a little more better, faring better here. And Green Dot is really doing nicely here with the highest money flow index here. And then you got implied wall. So this is where IV percentile comes into play. IV percentile is the highest for StoneCo here, 96, and then PAGS is the next one. So you could do some strategies with the implied volatility, especially strategies like selling put option below the current stock price, or strangles or straddles if you are up to it. And from a put call ratio perspective, keep watching this. Is very interesting. So as you can see here, PaySafe has got lowest. Let's see here, one of the lowest put call ratio that tells you in PaySafe and StoneCo. In the options market, folks are betting these stocks will go higher. They're putting their money on it. That's why it's more call contracts traded than put contracts. That's why it's bullish on both PaySafe as well as StoneCo. But on the PAGS, on the other hand, as you see here, there's a put call ratio is more than one. That tells you more people buying the puts than calls. So that means more people are shorting in a sense, and they're thinking stock might go down. That also indicated by this high short float here, 9%. That tells you people are buying put options. They think stock may go down. That's why they're buying put options. Then we got here SOFI here, which is a 0.44. Again, it's a more call buying than put buying, which is a good sign here. Green dot, still it's below 1, but it's a little bit higher, as you can see here. That tells you more people are hedging and buying some put option here. From a shares float perspective, for green PaySafe, there is a lot of shares available. There is more supply of shares, whereas other companies here, SoFi also has got more shares available. The more the shares available, it's a little bit harder for the stock to go higher because there is more supply, compared to the demand. That's why when there is a more shares float here, be a little bit careful. You might better off with the less shares float here. Like as you can see here, PAGS has got less shares float. Green dot has very less shares float. Those could be the better candidates here. So with that, let's jump in here and look at the performance. As you look through the performance here, clearly SoFi is a new kid on the block with not too much history here. Has done great in last 3 months or so, but other stocks are all in the red everywhere. But SoFi, I think, is doing better in the 5-year type time frame here, 59%. And then finally, let's look at overall health check here from a financial perspective. Clearly, as you scan through here, PAGS is the strongest candidate with the C rating here from a financial health, and also Altsman Z score 2.5, which tells you, the score above 1.8 is good. This is the highest here. I think this is a stronger candidate from a financial health perspective, and also from a growth perspective gets a B grade, which is good here. Profitability is a D here. So that's why PAGS is one of the good candidate here. And then we got here, StoneCo here, 1.1, which is one of the highest when it comes to Altman Z score. Gets a D rating on the financial health and a A rating on the growth here. That's also a good one here. Profitability is a F for StoneCo. Then we got a few others here. PaySafe looks like they don't have too much money. That's why you see a Altman Z score lower here. Lower the score, that tells you financially companies are not that stable here. That's why it's a lower score here. And then you got Green Dot here, which is a bank, 0.7, which is a little bit faring better than PaySafe here. So with that final verdict perspective, number 1 goes to PAGS here. As you see here, better financial position here and a nice B grade for the growth. And number 2, as you can see here, goes to SoFi here. Keep watching SoFi, a little more better from a financial perspective. Gets a C grade in the growth perspective. That's the number 2. Number 3 is Green Dot here. Green Dot has got 0.7 Z score here, but gets a B grade in the growth here. And finally, number 4 is StoneCo here. StoneCo, as you see here, a financial perspective 1.1 has got a good growth here with the A rating here, and the profitability is F. That's number 4. And then finally, number 5 is PaySafe here. PaySafe has got good growth here, but from a financial stability perspective, a little bit lower score compared to others. That's why it's number 5 here. So with that, that's a wrap here. So if you are plan to invest, look at some of these numbers here. You might look at some of these companies and look at stocks like PAGS here, given it's sold off here. You might want to buy some PAGS, SOFI, Green Dot, Stoneco, and PaySafe in that order, and take it from there. So with that, thank you very much. Happy investing and trading. Please subscribe.